Hello and welcome to TA for Traders. It's Wednesday the 13th of September. In this video we'll be looking at the charts on the S&P-500 index. We'll see that it moved to new high ground yesterday and that we expect further upside. So here we have the daily chart, and you can see that yesterday we moved into new high ground. There's been a bit of a consolidation in early morning trade today, but new high ground yesterday, and the technical picture still looks positive. I particularly like the fact that we pulled back 3 weeks ago, found support from the rising 50-day moving average. The 20-day then started to come down, did create a bit of resistance, but we broke through it at the end of August. We've then come back to the moving averages again, and now we're getting a push up from those rising moving averages. We're also going to get the 20 crossing the 50. There's 2 points or 1.5 points difference between them at the moment, so that's going to happen probably tomorrow or on Friday. So that will be a positive golden cross and will add fuel to the fire and should push the market further up. Even if we get, if the consolidation continues through today, tomorrow, those moving averages will still cross and the market will be pulling back to the support levels from them. Presently, the 20 days at 57.76 and the 50-day 59.4. On the RSI, you can see that we're in a nice uptrend, also quite well above 50, 63.53, and it was positive that the high that we had yesterday was above the high that we had at the start of September on the previous peak. So all very positive. And the MACD also positive, short term above the long term and both above zero. Looking at the weekly chart, so each bar here represents 1 week. Again, it was positive that 3 weeks ago we pulled back to the rising 20-week moving average. We were getting slightly overextended from all the moving averages, so it was good that we let that catch up. That's now given the push up. New high ground expected again. On the RSI, we can see that it's pushed back up to 67.5, which is good. Not quite as high as it was in the middle of July, but just let this rally continue and we'll see that push higher. I'm not classing this as a non-confirmation as yet because we're still on a green bar. And also, as I've said previously, I don't like non-confirmations on a weekly chart. And MACD, well, they've tracked down, but expect them to turn around again. They're kind of showing a slight lack of upside momentum, but again, they're a lagging indicator. On the 4-hour chart, so each bar here represents 4 hours of trade. You can see that a couple of days ago we had a golden cross on the 20 and the 50, which was good. The 200 4-hour average, which was tracking down, is now tracking back up. All these moving averages on any consolidation will give support. Again, we can see that the RSI reached a peak, which was good. Presently it's 67.21, just slipped slightly because of the last few hours trading, but nothing to worry about. Likewise, the MACD short term is still above the long term. Again, nothing to worry about, but the differential is closing. Just a sign that the momentum has just slightly petered out of the market. Looking at the support and resistance levels, there's only resistance at the all-time high, which on the SPX 500 USD charts is at 97.1, with support from the 50 on the 4-hour 24.72.14, and then at the 50-day 24.59 spot 4. So that's been TA for traders, having a look at the S&P 500. All looks good. The key takeaways from the video should be it's still positive, stick with it. All indicators remain positive. 20-50-day moving average is about to cross, create a golden cross, and the weekly is moving off its rising 20-week, which is positive. Many thanks for watching this video. If you're not a subscriber, please do click that subscription button on YouTube. You get emails then when I do further videos, so you get the information, and you can click straight through from that email onto YouTube. Please remember, these videos are for information only and my opinions, and they're not an investment recommendation. Please read the disclaimer. Hi, Richard. Yeah, I'm fine, thanks. That's all right. Yeah, are you here tomorrow morning, or? Right, should we put that in then? Let's do